afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets remain cautious on the first day of the week. The Nifty is locked in a range above the 11,550 mark, and the PSU banking index is the top sectoral laggard. Infosys is the top gainer on the Nifty after its first quarter earnings, and it's also increased its revenue guidance for FY20. What is also leading the gains today is Sun Pharma after Morgan Stanley upgraded the stock to overweight and also raised its price target. Crisis hit Dewan Housing Finance reported a net loss of over 2,000 crore for the quarter ended March 2019. The earnings were unreviewed and unaudited. The stock is down over 30% in trade. And Avenue Supermarts is also trading with strong gains after its first quarter numbers, where it reported its highest ever margins. Good afternoon, Neeraj. Well, a weak start to this week. I think had it not been for Infosys, the Nifty would also been in red.
Yeah, banks are certainly leading the charge downwards. Nameed, good afternoon. And yeah, that sums up the action in the session today. Frankly, we're looking at the Nifty doing this despite the Nifty Bank down 0.5%, primarily because Nifty IT and to an extent some pharma names have done okay for themselves. The market breadth should be ho-hum really. Nifty Bank about 0.5% lower, Nifty IT in the green. Market breadth is terrible to say the least, about 2:1, but just that the crisscross happened early on and then just stayed weak throughout the trading day today. But quickly get on the heat map on the Nifty 50 and show you what's moving there before we move on to the mid caps and the small caps. You could argue that the breadth is even Stevens, but look at the losers. Z corrects another 2% in the session today. IndiaNivesh Bank down about a couple of percentage points. Banks by and large are looking slightly weak. So SBI, ICICI Bank, Axis Bank, all of them are looking wobbly. Larsen & Toubro down about a couple of percentage points. There is weakness in Titan, there is weakness in Reliance Industries as well. So those are a few names that have looked really wobbly in the session today. What has looked good? Infosys packing a serious punch, 6.5% higher in trade. Good going. It started off slightly lower than what was anticipated, possibly because people came in and booked profits, but since then has gone up and stayed above that 6.25% mark. Sun Pharma on that Morgan Stanley upgrade is doing well, and Maruti Suzuki is back amongst the winners. Let's see if this lasts. For now, in the fast lane, about 1.5%, and that certainly looks fast, Devina, for the auto names, because usually we haven't seen them do this. But a good start or a good day for Maruti. Yeah,
and you'll also be watching out for some of these private banks this entire week as the numbers start to trickle in. Yes Bank, for one, has been creeping up slow and steady. It's back to those 95, 96 odd levels from lows of about 88. But all eyes out on stocks like DCB, Federal Bank, RBL, which report their numbers this week. But taking a look deeper into today's session and what's been happening in the broader market space, I'm going to start off first with some of the bigger movers in trade. Actually, they're all mainly losers that have had big cuts coming in there. Dewan Housing Finance, for one, the biggest cut that the stock has seen right now in intraday trade, 2,223 crores in terms of a loss. Alibaug Bank, you've got both Alibaug Bank and Future Enterprises. There have been some issues, some fraud with Alibaug Bank to the tune of about 1,800 odd crores. The stock's down 10%. CFO getting arrested at Future Enterprises. The stock's down about 5 odd %. Other stocks on the move, we've highlighted Avenue Supermarts and the stellar set of numbers that it posted. Good, additions as well, store additions, and the concerns of how they'll do with competition from likes of Reliance Retail or Amazon or Flipkart, that seems to have subsided. So that actually is doing well for itself. Spark, on the back of that big upgrade for Sun Pharma from Morgan Stanley, that too is doing well for itself on the back of that. And Credit Access Grameen is up about 6 odd %. Other stocks in the back of volume, you've got Piramal Enterprises, which has moved up on about 14 lakh shares that have been traded, 5.6% higher. Quest Corp continues. Yes, Friday session saw a big 18% intraday move. The stock in today's session has carried forward those gains of about 5 odd %. And Dish TV continues to move up about 3% higher. Losers in trade, Magma FinCorp, Hathway Cable on the back of those numbers, Serra Sanitaryware. These are some of your bigger laggards in trade, followed by some stocks stocks which are trading near their 52-week lows. Blue Dart for one, ITD Cementation, and Cox & King on a daily basis has been making new 52-week lows. So watch out for all of these stocks in trade today. But what's been happening in the more liquid universe is in the F&O space, and Navneet is going to highlight that for us. Navneet.
Thanks for that, Davina. Well, looking at the futures, there is no major build-up which has come in, at least for the Nifty Futures, which is just about trading above the 100-day moving average, which is somewhere about 11,522. 1.5% high, but the futures, remember, have been trading at a discount now for the last 3 to 4 sessions. But I think Bank Nifty is the one which is in focus, down almost 200 points in trade. Remember, Bank Nifty, for the longest time when it was outperforming Nifty, it was defending its 50-day moving average, which has been breached, by the way. So Bank Nifty, which is trading below its 30,500 levels, which was a key level to monitor, has seen fresh shorting coming about 12% higher when it comes to the futures, and the discount right now being quoted on the July futures is about 10 points. Also, remember the volatility index, the India VIX level has been on the lower side, but still in today's session we have seen some bit of spurt coming about. So VIX is also trading with gains of about over 2%. In terms of options data, the maximum open interest for the weekly expiry, that's on the July 18th on Thursday, is at the 11,600 call, and on the put side it is at the 11,500 put strike. What's happened today is I think more of call writing, and that too at 11,600 level, which is added somewhere about over 12 lakh shares, whereas on the put side you've seen maximum addition coming in at the 11,500 strike. And if you go by the premium on both the 11,500 put and the 11,600 call, the range that you're getting is between 11,470 to about 11,630 on the upside. Also remember, last week's low of Nifty is at 11,461. So I think on the downside the traders will be watching out for that level first. Stock futures, Infosys, the top gainer, which has kept the Nifty in the positive territory for majority of the session today. It's at its lifetime high levels. Also, the data which is being seen on the National Stock Exchange website, the volumes are pretty much high, and it indicates 44% of the traded quantity today is marked for delivery. So that's telling you there is cash-based buying which is coming on Infosys, and as you can see on the screen, the white line is projecting today's volume vis-a-vis the average volumes of last 20 days. So it's thumbs up to the earnings, the revenue revision, the guidance which they've upped it for FY20. I think they are getting a thumbs up from the street. And on the future side, long positions have been seen, but no major build-up hasn't come in terms of OI build-up. The other stock is Polio Hospital, which is registering strong gains for the second straight day. I think on Friday it was up 3%. It's also trading very close to its 52-week high of 1406. And the reason I'm highlighting this stock is because there's a lot of OI build-up which is coming on the future side. Last when I checked, it was up somewhere about 35 to 36%, indicating I think that's come off now 15 to 16%. Fresh long positions have been seen here. And the other one, not to forget, RBL Bank, which has seen huge selling today. The stock's down almost 5%, trading below its 50 and 100-day moving average, 30 to 35% higher when it comes to the open interest of RBL Bank's futures, telling you traders are betting on the short side. Futures also trading at a discount, by the way, and earnings are scheduled to come out this week on July 19th. So ahead of that, this stock is in focus.
From 700 odd levels to 609, there certainly has been a pullback in RBL Bank. It's not that DCB or Federal or the others have done that, but RBL Bank certainly has. However, let's talk more about these in a bit. First, start off with a global voice. Andrew Michael Sullivan of Pearl Bridge Partners is joining us right now on the show. Andrew, good having you. Thanks much for joining in. In a world which has enough and more dovish central banks, while the world markets are scaling new highs, the emerging markets not so much. What explains this dichotomy? Because it's not just India. A clutch of other EMs are seeing some fund outflows and some pullbacks. How do you look at this dichotomy?
Well, I mean, here we are in China and Hong Kong. We're actually seeing markets, seeing some stabilization from the data coming out of China. And interestingly, I think people are more confident that the trade conflict with the US is settling. And that's giving some confidence to some of the markets. But obviously, where we've got movement in the US dollar, that puts a lot of pressure on a number of those emerging markets in the meantime.
Since you were talking about China, what have you read into the various data points that have been coming in from there? We're talking about the economy slowing at its weakest pace since the time these quarterly data was available. Gross domestic product 6.2%, traces of what's been happening because of the trade tiff. How would one read into the indicators from China and therefore the repercussions for the rest of the emerging market back?
Well, I think the data that we saw that came out after the market on Friday on loans was maybe a little bit weaker than we'd expected. But again, the government house pricing this morning was again a little bit weaker. But that's a fine line for China. It needs to keep that housing market going, but it's very conscious that it doesn't want a bubble there. And then later, about half an hour later this morning at 10 o'clock, we got the GDP number, which, as you say, 6.2, very close to what the analysts were expecting at 6.3. And I think a lot of people viewing that as being signs of stabilization coming through. And obviously, we've had comments recently from the US about face-to-face talks on the trade talks. And people are taking that very much more encouragingly than they did last time, because we're not seeing the tweets from Trump. We're not seeing comments out of China. The whole thing seems to be being handled in a much more professional way, with negotiations going on behind closed doors and hopefully an agreement getting reached in the near future. And obviously, if we do get that agreement, that's going to make a big change to a lot of these emerging markets. Obviously, we don't know the detail of that agreement, but the likelihood is that it means that we'll see stability coming out of China. We'll see more growth in the emerging market area. And generally speaking, we'll see more confidence from investors, which should draw money back in again.
And to pull that point a little bit further, they had a better than expected retail sales data also, which led credence to the fact that stability could emerge, or rather will emerge, in the second half of the year as well. Andrew, what does this do for emerging market currencies and equities?
Well, I think for equities, I mean, they have been the sort of, as you were saying earlier, relative to the US, we've seen market being taken out of emerging markets and returning back to the US. But I think as we approach the earnings season in the US this time, we're going to see, and people are going to be watching for, what's the effect been on margins from this trade test, and really what's been driving these stocks markets higher. It's not really, I don't think, end demand. It's been a lot of share buybacks. It's been the tax concessions that we saw last year. And I think as people start looking for growth again, then some of the emerging markets are going to provide them with good opportunity. Now, obviously, as well, if we see the Fed cut interest rates in the US, that's going to put the dollar in a weaker state. And again, that's going to help some of the emerging market currencies.
Andrew, what's the view in India? Because last 9 sessions, we've seen outflow coming in from the FPI community, and with the fine print that has emerged from the union budget, which came out on July 5th, has sparked some concerns with regard to FPIs, which are listed as non-corporates, would also attract higher surcharge. So any thoughts on that, and thoughts on India, because we've seen a lot of outflow in the last 9 sessions?
Yes, I mean, I think people are a little bit worried about the wider economy there. And as you were saying, there are concerns in the press about the state of the housing market and the developers. There's been some concerns on the banks there. And all these are flags to a number of the foreign investors who want to be, cautious in these markets at the moment. A lot of them are already sitting on quite a lot of cash. So they want to make sure that the investments that they make are sound investments, which I think is probably why, to a large extent, we're seeing more activity in the larger cap stocks rather than in some of the small mid caps, which typically is where these funds would look to try and get their outperformance from. So I think, we've got this caution that is running wild at the moment, just because of some of the concerns on some of the parts of the wider market.
And in terms of capital flowing into different economies of emerging markets, and also keeping in mind that from the recent testimony of Fed Chair, which has indicated, of course, we'll be waiting out for the US retail data, that there could be a rate cut happening this month. If that were to happen, and if the capital has to flow from developed to emerging markets, which are on top of your mind, the countries which can attract more capital?
Well, I think if we're seeing stability, if he cuts the rates and we're seeing stability in China, then I think a number of the emerging markets in Asia should benefit. The slight flip side to that, I guess, is the fact that we do have that trade tiff between Japan and South Korea, which is causing some concerns in the tech industry, certainly in South Korea. But we've seen some good data out of Taiwan recently, and that could attract some more interest there. And as I say, especially if we're seeing that stability coming through from China on the tariff wars, then a number of these ones will from the supply chain side start to be looking very attractive. And of course, because of the trade war and the tariffs, we've seen a number of companies looking at diversifying their supply chains to the benefit of countries like Vietnam, Cambodia, and Indonesia. So again, those countries might be ripe for some new investment going in.
Andrew, so in light of that, if you had to have a pecking order in terms of preferences of countries within the Asia-Pacific region, I would include Japan in that, because of late, we've been seeing a lot of positive commentary regarding investment environment in Japan as well. So what would the order of preference be? I mean, if you have to stack up between a Japan or China, India and Indonesia and Malaysia and the rest of the pack?
Well, certainly, I think Japan, we've seen a lot of encouraging signs, as you mentioned there, and it's a very liquid market, so that always makes it very much more attractive than some of the other markets in Asia, just on the amount of capital that it can absorb without having too much influence. I think China, we have seen, that certainly the A shares and the H shares have been under pressure, and they've had a bad couple of weeks. So, that's mainly retail driven rather than foreign investment driven. The foreign investment into China, into the A shares, tends to come from index trackers. And obviously, we're looking at the FTSE and the MSCI increasing their weightings over time. But I think a lot of investors will wait for those weightings to be increased. So that brings us then to probably Hong Kong as a proxy on that. And certainly today we've seen higher flows than we've seen for quite a while, I think. But we're still running. Today was about 73 billion. Historically, this market has run anywhere from 85 up to 120. So there's still a lot of scope here. And I think the same goes for a number of the emerging markets that are linked to that. You can look at Taiwan, South Korea. As you were saying, India is always a healthy sized market that attracts investors. Then people will go down to the smaller markets. But liquidity in those markets and having the opportunity to invest in stocks with size becomes more difficult.
Okay, Andrew, we'll leave it at that note. Appreciate you joining us today and taking us through your views on the global markets. Okay, let's move on and address some stocks back home. Debt-trapped DHFL reported a loss of more than 2,000 crore rupees in the fourth quarter of FY19. The housing finance company put out its unaudited results on Saturday. Shefali Malik is standing by with the details. Shefali, let's start with the numbers before we get to some of the unanswered questions.
Well, the numbers were absolutely dismal for the company. They reported a loss of about 23 crore rupees. And what stood out in the earnings was provisioning and net loss on fair value to the tune of about 3,280 crore rupees. The only solace was a deferred tax credit of about 75 crore rupees, which provided a bit of a cushion to the bottom line. But net largely, the numbers were very disappointing. And the figure of 3,280 crore rupees included 3,190 crore rupees of fair value loss on the wholesale loan portfolio. The gross NPAs, another important figure, that came in at about 2.74% for the quarter.
Okay. And Shefali, it's the accompanying filings, I believe, that has raised some more red flags in the numbers, including a note from the regulator.
Well, yes, to start with that note itself, NHB has observed that the capital adequacy ratio should be around 10.24% for the period ending March 2018 against 15.29% reported by the company. The company is saying that they do not concur with the NHB's observations, and probably the reason for the lower capital adequacy ratio could be divergence in the asset quality, hence the higher risk weights and the resulting provisioning as well. So that probably could be the reason. So we'll need to follow up with what the company replies to them about this difference in the capital adequacy ratio. But more important, and in fact, other important things in the notes to accounts were 16,000 odd crore rupees worth loans for which the management is saying that checks were received. They actually entered those as the receipts in their books, but they were not later banked upon. So these should potentially be seen as stressed loans. So if you actually add that to the gross NPA crores reported by the company, they go up to about 21%, which is a very alarming figure. And other than that, they're saying that the management said that loans worth about 34,818 crores have been marked down by about 9%. Now, this is management's own assessment. So, actual markdown or the value of these loans, the markdown could be much more, and the value of these loans could be much lesser. So, these need to be watched out for. And there is a lot of documentation gaps in a lot of their loans to the tune of about 20,750 crore rupees. The management is saying that there are gaps as far as the documentation is concerned. Then there are intercorporate deposits as well, which saw a huge increase in the year gone by. So as of FY18, they had intercorporate deposits to the tune of about 5,653 crore rupees against 610 in the preceding year and 26 crore rupees in the year before that. So huge spike, and there are documentation issues there as well. So probably more answers need to be given by the, or we'll get to see what the auditors have to say when the final audited numbers are put out. So those are some of the red flags which have come to the forefront with these unaudited and unreviewed numbers.
All right.
But it's interesting. Yeah, Shefali, thanks so much for that. It's interesting that a company comes out and says that we may have a problem as a going concern in the future because business has come to a standstill. And that is probably one reason why it's showing in the way the stock is started off 10% lower than 15 and then currently at whatever level that it is.
Almost
this
30.
Statement from the management that is just the ability to completely not being able to raise funds has brought business to a standstill, and any bit of capital raising that will happen will only be survival capital and not necessarily growth capital.
And if at all, all those points which Shefali highlighted, if they were actually to be, brought back in terms of your NPAs, then it's a very big number to go by. So that's a big alarming number.
Yes.
But anyways, stock has been punished for that very reason. But moving on then, one large cap IT company has found ICICI Prudential Mutual Fund's interest in the month of June. Apart from that, it has also reduced stake in some of the large PSU names. Kapadia is here to take us through the portfolio rejig for the month of June.
Good afternoon, Devina. I'll start first with the companies wherein they have increased their stake, and as you rightly mentioned, Infosys is the top name over here, wherein they have bought in more than 1.5 crore shares in the company in the month of June. But that apart, as far as the trend is concerned, PSUs and financials is what they have picked up a stake in. So NLC India as well as BEL, they have bought in close to 83 lakh and 70 lakh shares respectively. But also in South Indian Bank and Bank of Baroda saw some bit of buying. We saw most of these PSU names run up ahead of the elections, and we saw some buying coming in from ICICI Prudential in some of these names. But Infosys clearly stands out over here. It's the only name, in fact, amongst the top 10 names as well from the IT space which saw buying, and the stock and the company came out with very good numbers, and the stock is up about 6% in today's day of trade. But on the other hand, they have reduced their stake in some of the power generation and power transmission companies as well as the telecom names. So Power Grid is where they have sold close to 2.7 crore shares, as well as NTPC selling about 1.74 shares in the counter. But SBI, Vodafone Idea and Bharti Airtel are the other three names you need to watch out for. Bharti Airtel and Vodafone India, each of them seeing selling of close to 38 lakh shares and 49 lakh shares, and SBI placed in between of them. But moving forward, let's also take a look at which are the stocks which make it to their portfolio for the very first time. And ONGC from the energy pack stands out. So they've bought close to 25.5 crore shares in the company last month. No clear trend stands out, but Gujarat Pipavav Ports, LIC Housing and PVR are the other key notable names wherein they have bought in significant stake. IndiaMart, which came out with their IPO last month, they have subscribed to it, and they have gotten close to 2 lakh shares in the company, but there were no fresh sell-offs in the month of June. So this is what stays and what makes its way to their portfolio for the very first time. Back to you.
All right, Yash, thanks very much for that. That is a portfolio reject to watch out for. Aside from that, Aster Dm is the other stock that you need to keep an eye out on. It is going through a rough ride in the market, at least declining nearly 20% this year itself. Private equity firm True North made its exit as an investor last month, selling entire 9.1% stake held in the hospital chain. While that caused a negative impact, the change in ownership rules in the UAE as well is something that we need to watch out for, and how that plays out for Aster Aster Dm. Let's talk about the business prospects and a lot more and speak to the Chairman and Managing Director, Mr. Azad Moopen. He's joining us right now from Dubai. Mr. Moopen, thanks very much for taking out the time. So obviously, while this is True North, I think the third fund, which has sold out its entire 9.1% stake, the fourth and the fifth fund, I believe, still have a holding?
Yeah, that's right. So the large part of the fund was bought about 10 years back, and which they have now liquidated because it has been a long period. But smaller stakes were bought later at different times, which they are holding on because they can hold on. It's only a short period. So this was only due to the reason that they were with us for a pretty long time that they have liquidated, and which has produced an offloading of the stock into the market.
Okay, so the fourth and fifth fund have how much percent stake in Aster Dm?
This is less than 1.5% of the stake presently.
Cumulatively, both the funds?
Yeah.
Okay. So let's talk a little bit more also with regards to, business. And obviously, like you said, True North has been invested for over a period of 11 years. Aster Dm has grown substantially, got this whole competitive advantage in the markets that it operates in. What is the plan going forward now?
Yeah, so we will be doing the business as we are doing now because the business is doing extremely well, even though it is not reflected in the stock prices. We have been doing very well over the last 10 years, and that's still continuing. If you look at our last annual reports, you will see that we have done as expected by the market, or even we have done better than that. And we see that business continuing this year also. So we will be focusing on the three sectors, which is hospitals, clinics, and pharmacies. And we'll be focusing on the GCC and India. And that is the markets which we know very well. And we hope that that will give us the same growth or even better growth as we go forward.
I just want to actually go back to my previous point. I'm sorry I skipped that question. But, the holding that you're saying that the other two funds of True North have, at what price do they have that holding?
Excuse me, I didn't get that question.
At what level do they have that holding? They've exited at a certain price. The additional stake that they have in Aster Dm now through their fourth and fifth fund, at what price is that?
Yeah, the general price of the what they have now is the market price, but they have bought it at the time of the IPO. They bought some stake, and which was at 190 rupees, and that has come down slightly. So the total stake which they hold is very little, and part of it has been brought later, and which will be at a little higher price than what the present price is actually.
Sir, I'm just going back to your business, and you said the stock price is not reflecting the good business that you guys are doing. True North sold at about 120. Your IPO price was 190. The promoter holding in the company is somewhere about 37 to 38%. Aren't you looking to increase then if somebody is offloading at lower price?
Yeah, definitely we would like to. In fact, even when True North was offloading, we wanted to buy, but we didn't have the funding to do that. So we were looking at some promoter funding and all, but again, there was this issue of if there is a promoter funding, again, it was not being seen good in the market and all. So we thought that we will wait, and we also wanted actually the liquidity in the market to increase. It was just 10% liquidity which had happened, of which very little was actually the float available. So it is in a way good that this 10% stock has come to different people, which will increase the liquidity and which will give more chance for people to buy the stock, sell it, and get the benefit out of it.
Okay, just moving back to your business prospects, tell us how much does rupee appreciation impact your business, because majority of your business is coming from Middle East and we've seen rupee appreciation in the last few weeks.
Yeah, so this goes up and down, but in the last 1 year it has not been very significant. Usually we earlier used to get significant benefit out of rupee depreciation because we get 83% of our total revenues as hard currency. But this year it has not been, and we are being told, and we expect that this will remain at this level around 70. So we don't see this as a major factor now, but we definitely have the advantage of doing most of our business in hard currency.
And what about the debt level, sir? I think it's about 25 crore. How do you plan to reduce it? What's the debt repayment schedule for FY20?
Yeah, so debt repayment will happen. We are in fact now around 2.7 times of our EBITDA, which we want to bring down, and our debt to equity ratio is just 0.6. Our whole aim is to reduce the debt as we have more profit coming in. We would like to reduce the debt and also to, of course, continue the growth, to some extent investing the money. Because last year, if you look at, we have about 850 crores which came in as EBITDA. And a part of this has been used for investment, but a part of it is also going into the debt reduction. So one of the important aims is to reduce the debt. One way in which we are trying to reduce the debt is by liquidating some of the assets which are sitting with us. Some of our hospitals have got significant lands which are not being utilized. It's not required for the hospital. So for example, in Cochin, we have large land. In Saudi, we have assets. So we want to liquidate that and reduce the debt if possible.
What's the total value of these assets that you highlighted in Saudi and Cochin?
Excuse me?
What's the total value, the current market value of the assets you just highlighted?
Yeah. The Cochin asset, the total area is 42 acres, and we have just used 20 acres, including the expansion. 20 acres only is required. So if you calculate the present price of land at Cochin for the rest of 20 acres, it should be minimum 250 to 300 crores of rupees, because it's a prime land. It is a waterfront property. So we are seriously looking at doing that, or going with some real estate developers who can give even a better price, so that this whole money can be utilized for our business or reduce the debt. Okay. Like that in Saudi also, we have the total, the value will be 300 to 400 crores.
Yeah.
500 to 600 crores, 300 million dirhams.
Right.
So it's a significant asset which we can, at least a large part of it, we can liquidate, and we are looking at that possibility.
Yeah. All right, Mr. Mupan, just the last few questions before we wind up this interview. Firstly, your growth trajectory. You've seen a 40% year-on-year EBITDA growth, 140% year-on-year earnings growth in FY19. How does this stack up compared to FY20? What will you do in FY20? Will you see a substantial uptick in your UAE margins as well? And now that the UAE cabinet has approved that 100% foreign ownership in healthcare, how does that impact you?
Yeah, so two questions. One regarding this ownership. So we have been sitting pretty well, because all our assets were being in the DIFC, and so it doesn't make a huge difference to us whether the new rule has come or not. But definitely it is something which will give more confidence to the investors and all, but we were well protected. Now regarding the growth prospects, we find significant growth prospects in the GCC and India, and our target growth is in EBITDA about 20% growth. In revenue also 20% growth. So even though there has been phenomenal growth, these are not something which is sustainable. What we are looking at is a 20% EBITDA and a 20% revenue. That is what we are looking at, which we will be able to sustain in the future.
All right. So what you're saying is that those numbers were a little optimistic for FY19. You're bringing it down back to earth and saying about 20% on EBITDA and 20% on earnings growth.
That's true.
All right. All right, Mr. Mupan, thanks very much for joining us. Really appreciate you taking out the time.
Thank you very much. Thanks a lot. Thank you.
All right, that was management of Aster Dm clarifying and talking about the stake sale that True North has done, and for no other reason except that they have been invested since a really long time and they needed an exit. Not to say that they still have a marginal holding of 1.5% through their fourth and fifth fund.
Okay, I think let's switch focus back to the markets. By the way, Bank Nifty is still trading in the red, so we've not seen any major recovery coming by. And Nifty is in the positive territory because of the gains we are seeing for the heavyweight Infosys, almost 6% weightage on Nifty. All right, good time to bring in our experts on board. Then Hemen Kapadia of KRChoksey is joining us right here in the studios to give his technical take on the markets. And we've also got Sameer Kalra, founder of Target Investing, in the studios. Good afternoon to both of you. Hemen, let me come to you first. On the Nifty, which is currently trading above its 100-day moving average, but it's been flirting with that level. Would you take any bet, or would you wait for a convincing move either on the upside or on the downside before initiating a fresh trade?
Very good afternoon to you, Navneet. I think we saw some 6 lakh reduction on Friday. We have been light. We started at 180. We've been hovering around there, so not much activity. Funny thing is the VIX went down during the week of the budget, which was very strange, and we're at 12. So it doesn't make sense to write calls on puts, Navneet, but I still think they're the bounce. So high risk one at that. So I'd go long on the Nifty at 11,550. I think already it's trading at a discount. Stop loss 11,510, target 11,630. I think 11,650 is a possibility and maybe crossed over the next 2 or 3 trading sessions, Navneet. Sustainability above that comes to 11,710. Beyond that, I think, firstly, this needs to happen. Beyond that, it looks like skating on thin ice. So the way I look at it, it'll be a bounce for a short. And if the bounce doesn't come in, I'd stay away and wait to go long at sub 11,400.
Okay. And what about bets on individual stocks today?
Havells looks like a buy to me. It's moved up a bit since, so I need to tweak the figures a bit. It's 718 now, so buy at 716, stop loss 710, target 734. Buy on Voltas at 585, stop loss 578, target 599. They're all bounces, and probably a week later, the same stocks will probably be shorts again, Navneet. But with or without the bounce, I think 11.4 is going to be under threat once again this month or the next, and I don't think it's going to stop at 11.4. So there was a gap post exit polls, 11,426, 11,591. That has been partially covered. I think they'll get fully covered and go down further, but this is probably a 2-3 week sort of a call.
If you were long on an Infosys, would you stay long?
No, I'd book profit.
Okay, you would book profits in Infosys.
Yeah, IT maybe is oversold, and frankly speaking, Infosys is given a monthly breakout. It's posted a fresh all-time high. It's broken out after 4 months of hatching eggs. So technically it looks great, but in a market like this, I find hard to believe that anything is going to do well. So standalone, yes, if I were to do something out of the ordinary, I'd keep a stop loss at lower levels. But no, if you're making money in a fickle market like this, take it home.
Okay. Well, that's Hemen's advice. Let's get in a fundamental voice as well. Sameer Kalra joins in right now from Target Investing. Sameer, good having you. Thanks so much for joining in. Same question, actually. We were in the morning. Agam was talking about Infosys versus TCS, and in typical football parlance, it was 3-0 for Infosys versus TCS. Is that good enough reason for somebody to stay invested in Infosys?
So I think if they have already been invested in past 1.5 years and they have roughed through all the period, I think now is a fruitful period for them. Now they'll start seeing the results of the investments and the management change, and this might just have a quarter-on-quarter improvement as well. So because if you see the BFSI number, if you see the deal wins number, that gives you much more solidness that this consistency of the number will be much more sustainable now onwards. And the commentary of the management made you more optimistic rather than the pessimistic end of it, of the demand as well. So I think now onwards the trend might change, though the difference between the valuations might take a couple of more quarters to come to even a closer level. But I think now it's a time where you can, actually reap the benefits of the 1.5 year underperformance, which was there in past 12 to 18 months, as compared to TCS or that kind of evaluation.
Okay, so that's with regards to Infosys. You think Divan is going way lower than where it is right now?
I think Divan...
So somebody is stuck out here. What would your advice be?
So I think even at 70s, 80s level, I was like, exit this stock.
Yeah, but it's at 50 now.
Yeah, so even at this level, I'll suggest them to exit right now. Because the only point is, even if you see the resolution, whatever talks are going on, whatever steps are being taken, there's actually nothing being rectified for the DHFL listed firm. It's more on the subsidiary sales, more on the cash raising to meet the obligations of the creditors. And I think once even now these results show you the asset quality is a doubt. It's not about the only raising funds. It's not about only, you're not getting cash for the regular liquidity. It's about even the assets which you have, they are doubtful now. So what else for a financial firm can go wrong if you can't raise capital? If you're still not able to find a resolution plan where everyone can meet on the same page, and your assets are going down. So I think everything wrong is happening with them, and I see a much lower level for them.
Okay. While we've been talking a whole lot about how IndusInd Bank did and its quarterly performance, this week is going to be big with regards to the smaller private sector banks. I mean, while they have been favorites of late, do you see something? I mean, IndusInd Bank probably had its own, watch list where analysts wanted to know what happened to those three accounts, and when that turned on its head, the stock was beaten down. What is it that you're going to be looking forward to from these other smaller private banks?
So I think one is what kind of a provision or what kind of recoveries now they are estimating. If I take that NCLT order, and if Supreme Court doesn't reverse it in any way, I see a lot of further provisioning coming into the system. So whether they are small banks or whether they are large banks, that really doesn't move the needle now. And the recoveries factored in for the banks, especially the small private and the PSU banks, is a large amount of recovery, which I think by that order just gets negated. So I think there is a risk factor to it, and any kind of falls or profit if you're sitting at, I would at least reduce my weight in the portfolio for these kind of banks as of now. I won't increase the weight or hold them as of now, that much.
Hemen, what would you do with some of these smaller names if you haven't already spoken about DCB, RBL, Bandhan, Federal Bank?
The Bandhans of the world are relatively better placed, but frankly speaking, Devina, there's not too much of data to take a longer term view, or whether even if it's AU, small finance and stuff like that. So they seem better placed, but they're not in a very tradable situation now. Even Bandhan, Devina, if I can just take a minute or two, we've been hanging on to this range between 520 and 570 for the last 5 weeks. Now there is no directional bias. Yeah, if it breaks 520, it'll tank $40. If it crosses 570, it'll go up $40. So nothing very actionable or tradable from that point of view.
All right. I think Brijesh Singh of Stock Access is also joining us on the show this afternoon. Brijesh, good afternoon to you. A quick take on the indices and how will you trade them?
Good afternoon. Devina, see, if we talk about indices, there is nothing looking promising right now for the bull side. If we talk the broader range, then 11,400 on the lower side, followed by 11,700 on the higher side. Still, overall trend, if we talk about for a shorter term time frame, is been negative. So taking that thing, Nifty spot value right now has been quoted somewhere 11,580. So any rise above 85, one can take a sell side with a stop loss of 11,620 and look for the target of 11,460. Time frame to hold the counter would be 3 to 4 trading session.
Okay, and what about your individual stock bets for this afternoon, Brijesh?
Definitely. See, if we talk about stocks, then there are two stocks, one on the buy side, one on the sell side. The first counter is Aurobindo Pharma. What I have been witnessing is that the stock has been trading in lower tops and lower bottom formation. The previous swing low or the monthly low of the previous had been broken. So right now the stock is quoting somewhere around 575. So any rise above 570 here, one can take initiative of going short with a stop loss of 590 and play for the target of 560, 562. Even target can be extended to the level of 545. Second counter is on a buy side, JSW Steel. The previous week high, the stock has been crossed very easily with increase in volume, which indicates the overall bullishness. The higher lows formation on the shorter term time frame of the chart indicates for the bull side somewhere around 270 would be a buy with the stop loss of 259, pay for the target of 281, 282. Even the target can be extended to the level of 288. Time frame to hold the counter would be again 2 to 3 trading session.
Okay, so those are some stock picks coming from Brijesh. Pull up the intraday chart of Spark. Remember, Sun Pharma has been in focus today because of the upgrade that we've received from Morgan Stanley. But Spark, I think in the just last 15 to 20 minutes of trade, had seen some gains of about 17 to 18%. In fact, we're talking about that upgrade. Morgan Stanley double upgraded the stock to outperform, citing potential recovery in its earnings. Let's go across to Darshan to find out what exactly has the report put out. Darshan, over to you.
Yeah, Navneet, the counter has been moving for the past few days, and finally, Morgan Stanley's double upgraded the counter straight from an underperform to a buy. The target price has also been raised to 505 from the earlier 470. The other thing that they've done is that they've added them to added Sun Pharma to the Morgan Stanley focus list, and Ultratech Cement goes out. Now, a couple of things that they're saying that at this point of time, Sun Pharma's earnings are and stock prices are both at multi-year low. So they believe FY20 will be a transitional year, which will be followed by positive operating leverage for the company. And FY21 is where they have an expectation of earnings revival to come in. They don't think that the potential upside is priced in for the specialty business, which probably will be the big trigger that for them. And as far as the stock price is concerned, they like the counter and recommend buying it because they believe valuations are inexpensive at this point of time.
Okay, thanks a lot, Darshan, for bringing that update for us with regard to the upgrade that we've received from Morgan Stanley for a stock like Sun Pharma. That's up 4%, and Spark has also gone up in trade. Samir, the report has cited it prefers Sun Pharma to Ultratech. Would you go with it?
No, so I have Sun Pharma and Spark both in my portfolio.
How many stocks do you have in your portfolio?
Around 45.
Wow, okay.
45. Because it depends on the weights which you give. It really, I can have few stocks which I've just recently started buying in small parts and which are like hardly 0.5%, 1%.
Just out of curiosity, which is the top rated stock in your portfolio?
So right now, top favorite, Petronet LNG was the top.
Weighted?
Yeah, top weighted in past 2 years, let's say. In that sense.
But anyways, coming back to Sun Pharma. Yeah.
So I think, see, for me, anything above 450 to be bought is a little dicey as of now. I would rather see the results and give them the weightage, increase their weightage that time. Because a double, whatever the report has said, it's something I think already in the system, already expected by the markets, and that FY21 should be better off. Specialty drug story will take, I think, 2.5 years to unfold in a full proper way for Sun Pharma, because generics still dominate the cash flow. So the replacement of generics cash flow will take a longer time. It won't be that easier that 1 year gone and you'll be able to replace it. And the other part is, if you see US generic index, which we follow, that has somehow reversed and a bit, at least a 4 to 5% past couple of 3 months. So we feel there is some kind of a bottom in the generics. So I think out of the whole pharma array, I think Sun Pharma is the best place to benefit out of the whole thing.
And not that there have been any issues with regards to its growth. It's just been that one issue with Aditya Medisales, which actually brought the company stock price down massively.
And they are on the verge of sorting it out. So I think Q1 FY20 was their deadline, and this results should show that the financial impact is over of that. So I think that will benefit out of them.
Is Spark a good call option?
Sorry?
Is Spark, Sun Pharma Advanced Research, a good call option?
Yeah, in a way, yeah.
It's 146.
Because see, the only point is what happens at Spark is the R&D of the specialty. You get the actual benefit of the specialty at Spark rather than the Sun Pharma Industries. So the Spark, that's why the run-up certain days when the launches happen or the ANDAs are filed, the Spark benefits much more further than regular Sun Pharma.
The other one's Avenue Supermarts, which reported a very strong set of numbers, and store additions, gross margins have gone up, and that too on a higher base, which actually suggests that growth is really on track. And since its listing, the stock has seen magnanimous move on the price. Valuations have come off sharply. So a 2-year P multiple of 117 times has come down to 67 times. with the strong growth projections. So that should be a clear buy, shouldn't it?
See, it should be a buy, but the only point is, was this one-off quarter? Because you showed 3 quarters with a low growth, lower margins, the inventory pile-up was there, the balance sheet has a pressure. Though we still have a hold or a neutral on it, because we want to see how sustainable this quarter performance can be carried out, because even the management somewhere says that, you know, this is not the full year parameter you can go by. So I think another 12 months or 9 months will be taken where the retail end or the consumption end really takes a beating, and there might be a reversal only after that.
But do you think the way the retail landscape is changing now in India, it can have implications on their revenue growth and margin growth going ahead?
So I think it's more of the cooling of the 20% YOY endless growth or last 5 years or last 6 years everyone was showing. And now, whereas you'll see a 10%, 11%, that's why when she says that 117 PE came down to 67. And the price hasn't changed that much. If you see, it's gone only from 1650 to somewhere 1300. So the more contraction on the EPS side has happened rather than the price side. So I think it'll take a time, another 9 months, and I think we'll be back to a normal consumption level.
Then the earnings expectation should have moved up, right? If the PE is contracted, but if the price hasn't fallen.
See, what happens to earning estimates when they are optimistic and the actual results start to show the distress? They downgrade the forward. So it's like when we talked about autos in December, everyone was optimistic about it. There was no downgrades, there was nothing. Now when you're in June, 6 months later, when the actually slowdown is halfway or maybe to a certain extent already getting factored into the actual demand, and there are another 9 to 12 months left of it, now everyone starts to downgrade the estimates.
Yeah.
So it's like a late reaction to a forward earning.
And
so
21-22 is anyways 56 times, 53 times. It's started coming off meaningfully.
Yeah, well, that point too. But I was just listening into. Sorry, you want to make your point?
No, I'm saying it was listed at a higher PE.
Yeah.
If you see Jubilant Food, it was always listed at higher PE. So whenever we've added it at, let's say, a 50 or 55 times.
But just to compare it to even its listed peers, it's a dramatic drop in valuations for revenues.
Yeah, because the growth at the PAT level has been consistent. So that's where even if you see the listed peers, they've always had a kind of volatile years. So if you see Shoppers Stop, there was loss-making years, where Avenue never had that. So that's why the PE contraction happened more from the EPS side rather than the price side.
Interesting to see. I was just listening to Yatin in the morning, and some of the 2 things that the brokerage notes are making out. One, the store addition numbers were strong, but that was partially because of the spillover effect of the previous quarter. So the unfinished previous quarter wherein the spillover effect happened. And of course, whether or not Avenue Supermarts can maintain this operational performance, because even last year at the same time they had a very strong Q1 in terms of operating performance, and then it was downhill. Will they be able to manage after a very strong Q1 into Q3, Q2, Q3?
Yeah, that's where I'm coming in, whether they can consistently do that.
But then if you're saying Q1 last year was a strong quarter, then on that base they've done this.
So if there is a seasonality in the system, that comes to Q1. So you can outperform the YOY, but quarter on quarter, if you start comparing, there might be a tick off in the pickup.
It's a question. I mean, we don't know that will happen or no, but it's a question nevertheless. Do watch out for Avenue Supermarts as well in the session today. Brijesh, just come in very quickly on this one. It's not a very high volume stock typically, but 5% higher, 1.5 million shares today. How do the charts look?
Good evening, good afternoon, Neeraj. No doubt today there has been a gap of opening because of the results. Now the stock has been trading above the support zone, that is 1415 to 1420 band. So if it holds on this level of 1415 in say for a couple of days, then next rally for the higher side would be somewhere around 1460 to 1470. But purely for an investment point of view, what I feel is that if it trades somewhere around 1400, that would be the best part, with keeping a stop loss of 1320 and play for the target of 1550 to 1600 for a 3-month to a 6-month time frame is concerned.
Okay, Infosys is up 7% now. That's a market cap northwards of what, 3.25 or 3.3 lakh crores, and on extremely high volumes as well, I must add. That's about 27 million shares traded in the cash market. The F&O volumes would be high too, but the going is strong thus far. It's trading at the highest point of the day and it's trading at 52-week highs. So do watch out for Infosys in the session today. Samir, before we thank you, aside of Infosys, anything in the IT space that looks like a good buy, or would you avoid IT?
No, I'm interested in Tata Elxsi, but not at these valuations. I might see another 20%, 25% down, and then look at them. Because if you talk about the automation, if you talk about IoT, if you talk about automobile spends, I think this is like a IT which is more into the hardware rather than the soft end to it, and gives you more USP in pricing powers as well. So I think this is one stock I'm interested in, but not at current valuations.
We'll leave it at that, Samir. Thanks so much for taking the time out and being with us. Appreciate your time. That's Infosys and IT, but doing rather well for itself is Infosys. It's pulling the IT index along with it. It's in fact one of the reasons why the Nifty 50 is in the green. If you pull up the contributors list, you will see banks are playing small sport, but Infosys, to an extent Sun Pharma, are giving support. The contributors list has 47 points from Infosys, single-handedly negating the kind of fall that have come in. 52 points on the losing side total, 48 from Infosys alone, single-handedly really keeping the index afloat in the green. Nonetheless, let's move on to corporate conversations. The Karnataka High Court has ruled in favor of NMDC in the Donimalai case. The court order quashed Karnataka government's demand of 80% royalty from the mine. Bloomberg Quint's Nikki Mirchandani spoke to Mr. Bajendra Kumar. He's the CMD of the company, and Nikki started by asking Mr. Kumar about when is NMDC expecting to restart production in Donimalai mine. Listen in.
Our legal team, who were present before the court, has seen the order and also heard the pronouncement, and we are waiting for the detailed judgment copy. We have applied for that. Probably we'll get it today evening or tomorrow, by tomorrow evening. The order is that the petition is allowed. That is, NMDC's petition is allowed, and the condition imposed to levy premium equivalent to 80% of average sales price, a minor published by IBM Communication. And they have communicated, the government of Karnataka has communicated that this is the condition that has been set aside. So there is no condition approved by the Honorable High Court of Karnataka. So we can start mining once we get the copy of the order and then give it to the state government, request the state government of Karnataka to extend the lease and execute the lease, and then we will go to the forest department for a formal permission. So I feel that we can get it done within a month's time, and I have discussed with senior officers of Karnataka. They are also waiting for the court order, copy of the court order, and probably we will be able to resume the mining operations within a month's time.
All right, sir. Actually, sir, many brokerages have been suggesting that Karnataka state government could further challenge this order, if at all, if there is any communication with this regard. And also, sir, if you could put a number to what is the kind of production now that you were expecting from this mine in the Q2 FY20 and for the financial year as a whole.
See, the limit set by the Honorable Supreme Court for Donimalai mines is 7 million ton. Generally, we have about this quarter we will be losing about 2 million ton, of mining. So we will be able to complete about say 5 million ton if we start it by August. So the production, total production of NMDC will be around 35 to 36 million ton. And if without Donimalai, we will be producing only 31 million tons. So we expect another 5 million ton to be added this year if we could start operation by August first week or so.
So what is the incremental EBITDA that you would fetch if you happen to manage the extra 5 million ton production from Donimalai?
No, I don't have it right now. I have not got the details because 5 million ton will be added to the existing production. That will come around 36 million ton, and the rate, the sale price and the details will have to be worked out. It will be depending on the auction. So I cannot predict any particular EBITDA right away.
All right, sir. In that case, sir, do you think if you restart this mine, that will add to the supply in the market, which is already oversupplied right now, and in turn also would depress the auction prices that otherwise would have been higher in the second half of
in Karnataka, the iron ore produced cannot be exported out. Okay. And there are big steel players, and we have good clients there. So we expect that our production of 7 million tons from Donimalai and 7 million tons from Kumaraswamy will be consumed by the Karnataka players only. And we don't expect that there will be any problem with our sales.
Sir, I was just wanting to understand what's the kind of pricing that you now expect that there'll be because there'll be incremental supply going forward in the market because of the 5 million ton that you would now produce from Donimalai?
I don't expect any major changes in the pricing system which we are following. And that is not actually depending on this 5 million or Benadilla mines alone. It has got the larger market implications and also the availability of our iron ore in that area. So the pricing will depend on the market forces, and we will be keeping a watch on Indian market, Indian steel pricing, and also the international market. And after that, we will be taking decision on a monthly basis, sometimes bi-monthly basis. So I don't, expect that because of this 5 million ton adding to any pressure on the prices or all, the prices will be continued to have the same kind of trend, which is likely to sustain. The current pricing system is likely to sustain for a couple of more months, and depends on the availability in other sectors, because we are only a 18% player in the whole market. So it will depend on the Indian market situation also, the kind of iron ore that are going to be available from Odisha and other places. So I don't think this 5 million pack will have a great impact on pricing as such.
All right, so in that case, for the month gone by, the company has managed to keep the prices pretty much at the same level. It has not changed. It has not undergone a cut, or for that matter, a rise there. I'd like to understand how is the trend moving forward. Are you seeing a demand coming in from steel sectors? Because we have been extensively reading about how auto slowdown has impacted steel sector as a whole. And if that is your consuming...
Into consideration of their demand also, and see the market situation of not only the big steel producing people, but also the other sponge iron people from Chhattisgarh and other Karnataka also. We'll keep a market on that, and considering the market situation of the steel and steel pricing situation also, we'll take a call as and when required. But we will definitely cater to the needs of the Indian steel market.
Sure, I get that. But sir, steel sector in this week itself, they've undertaken a cut for 6 consecutive weeks. The prices are now trading at a December 2017's low level. So do you see some kind of impact on this account? There would be some slowdown in the demand as well?
I don't expect a slowdown of demand, but what I can only say that the pricing policy will consider all these issues which you just mentioned about the fluctuation in the pricing and the sliding of pricing in steel sector. Pricing will be done accordingly.
All right, sir. The last question that I have for you is, in that case, sir, there has been a termination of contract with BHEL, which is likely to delay the steel plant commissioning further. I think that was to be commissioned by October 2019. What's the kind of deadline that now we can expect the steel plant to be commissioned by?
We have issued a notice to BHEL because they have been a lot of delay in the whole implementation of that package. So that notice has been issued, and if probably required, we will take appropriate action. And of course, this will delay. We'll expect a couple of months delay if at all the contract is terminated, to have other systems in place.
How many places